Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 18th of October, 2019. This is episode number 1620. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is, in general, the market sentiment is really mixed, slightly risk off ish. Um, Crude oil's taking a pop. Reminder that crude oil has rolled to December. December's the front month now. The symbol CLZ9, trading at 54.44, up 0.74%. The bonds and the notes are up. The Bund is down 24 ticks, and the Euro stocks are off 18 points or half a percent. Again, it's there's nothing super significant here from the overnight session. Fairly muted session. Really, focus still remains on Brexit. Tomorrow, the UK has a parliamentary vote on PM Johnson's deal. PM battling to sell his new Brexit deal to skeptical members of the parliament. But the deal is expected to be close. There's not much coming out of the White House or China currently, except just nonsense on the news with basketball players and so on. Uh, we're still in earnings season. American Express announced today generating $2.08 earnings versus 207, and revenues are in line at $11 billion. The other big one that announced today was Coca-Cola, but everybody's got a calendar and everybody can find out what those earnings are. In terms of what's ahead in today's calendar, which whatever's scheduled, we have four Fed speakers. Kaplan speaking again after the close. Um, the three of them, well, Fed's George and Kaplan speak at 10 a.m. Eastern, Fed's Kashkari at 10:30, Fed's Clarita at 11:30, and then we have the monthly budget statement out of the U.S., and that wraps up the day. So there's not much there to look into. Um, Hopping over to the review segment, yesterday the ES was opening in a small gap up into the balance of Tuesday, and the expectation is a slight drift down into 97.50 or so, and the market's likely to pop and push into the liquidity that was there at 30.10. There was plenty of liquidity at 30.10, and then likely to roll over. With the expectation that we would reach a 3015 area, which is kind of a high volume node zone on the September composite. The secondary scenario is to push that high at 3,675 overnight, push through that a little bit towards the liquidity, but end up selling off. That's the pink line here, end up selling off and then targeting 93, 94, the 93-94 area. Here's what actually happened. It played out to scenario 2 pretty well. I'm going to use the trigger chart because there wasn't all that much action. But you can see us here opening in a gap, pushing up, down, up. What we have here is a very, very clean opening swing. So let me take a moment because it's Friday and just walk you through how this looked, a little bit of how this looked as the market was trading. Let's turn off the stock zones because those are today's. Anyway, so we open up at 3,002 and a quarter. We test 3,450. That's your opening swing high. Remember, the opening swing is not like the opening range. It is not based on time. Time is not that relevant to me personally. So we go to 3,450 and come off, and then we consolidate against the open. It looks like it's just not able to hang on and turns down, and becomes responsive, which tells me immediately right here, right at this point, I'm thinking, okay, scenario two or scenario one back to 29.9750. Watch for the reaction at 29.9750 for a potential pop into 3008, 3009 consolidation there for the afternoon, and then finally relieving itself to the upside to 3015. Remember, that's scenario one right there, the green, what I just described. So we're looking at this. Scenario one and two are on the table still. Oh, looks like it's pushing to 3,000. Some liquidity there yesterday. Hangs on, gets to the mid. There's the mid test. But this is an open auction. We don't really care about that mid that much. So that was kind of a trick comment. Then it crosses through the open and extends the opening swing up. So now we're thinking long side, look for the pullback, small pullback there, and then squeezes into that high liquidity at 3008. So that's what we have. We've got a market that's in an open auction out of range, and so it's a two-way auction. So don't sit here and expect some sort of a massive um, breakout or continuation, unless of course it consolidates for a while or the OTF or higher time frame pushes in. So here's 3008. Looking for an opportunity for the 3008 to continue. At this point, we still don't have a bona fide impulse up. Really, there was a move up so there was a move up here, and then you have the flagging, then you have the continuation move right here, and then it starts to be corrective. So at this point, if you're in the Convergent chat room, this is where I said this is likely to continue lower. Look for a pullback and look for the rotation down to extend that the opening swing down. Also, the opening swing tested twice. There's weakness there. People see that as strength, a double bottom. I don't see it as strength. If it's made that way and there's a fair amount of volume there, it's really weakness. There's the continuation move, and now we're looking for an extension. There's the extension. The IB gets extended down, and we have our continuation move. So the first trade that set up was that cleanly set up structure trade that cleanly set up was right there, right on this pullback after failing to extend higher. And then I'm looking for 3,000 with a stop of 3 points. So it's about a 1.25 1.25 to 1 risk reward ratio there. Not great, but if it continues, we have a pretty good deal. Tests the prior high and then falls back in the range. So now we have hit, just to bring this back, there's that area that we're looking for, an impulse down. There's the pullback. That was the short at around 3004. Looking for the continuation to where? To 29.93.94, and then the market is likely to go sideways. That's the scenario that was built. But what this did is it pushed into the 3000 29.92 93.94 right in here, and then just kept squeezing lower. It was just not able to find uh, real strong buyers. Here's another opportunity, pushes back to the mid. So what we have here is our first bona fide impulse down, pushes back to the mid right in there, provides an opportunity for mid and IB low and opening swing low against the millennial figure to catch at least a 4-point rotation from 3,000 and a half, 3,000 to at least 29.96, pays up right there. And then from here, my expectation was for it to just get choppy. Okay, so that's how that scenario played out. So let's forward. We get to 29.90.50. We find support. We close the prior, we tag the prior day's close, and then we push into the mid, and we're stuck at the millennial figure, and we end up finishing right in the middle. We still have a variation on an open day. We extended the range down from the IB. So it's a selling day. The point of control is outside of the IB. So we do have a downward skew here, and overall, the market seemed the sell-off to me seemed very orderly, very well organized. But early on it was hard to tell what was what. But overall, scenario two was in play. Let's carry that over into the overnight session. Here we are, the typical Asia box. Early on, Asia takes on a downward drift into Europe. Europe generally reverses what Asia does. I don't know if you noticed that. Um, and then we get this really stringent, really organized drift up. The volume is lighter than what it's been in the last few days. Still pretty good, still pretty high. And then the overall profile shows balance and consensus. This is what consensus looks like, although the high seems a little odd looking. So as I extend this out, we can see the volumes at each price. You can see that the volume drops off very rapidly as opposed to very gradually. You can see the volume down here dropping off gradually, 400, 200, 500 contracts, and it's kind of a gradual move. Whereas up here, it goes from 1474 to 321 to 9, and then it dries up and rolls over. So overall, it is a balanced overnight session. We are above the mid, above VWAP, the full session mid, and VWAP, beneath the overnight point of control, but and we're on top of yesterday's balance. So it's just so what we have here is a market that is in a holding pattern based on the overnight action. And so we open up in a mixed sentiment type of market, which makes complete sense. Whew. Did you follow all that? So that's where we are. A quick look at the order flow from the last couple days. Here's yesterday's order flow heat map. Pretty stocky, pretty packed day. We could see how the liquidity has shifted around. The orange is higher liquidity, and overall, what we had is a lot of play in this 3,000 area. You could see this area here as having all this, all this back and forth liquidity. The orange going up and down and up and down. There's just market participants are hedging or doing whatever they do with that big figure. It's got to be a pretty big strike. So the overnight session, really not much. I mean, we ended up having that 29.90. One of the things that I talked about yesterday from yesterday's overnight session is this 29.90 liquidity that's been sitting here. Here, let's see. There it is in yesterday's overnight session. You could see it kind of carrying forward, and that's what we hit on the low. Yesterday's low is 29.90.50, and this is why I'm going over the liquidity picture and why this is important. So here it is from yesterday, and then it shows up again in last night's session, and we end up with a collision and a bounce. This looks like a bid with an iceberg behind it because quite a bit traded here, and then we ended up pushing up from there to back into the 3,000 area. We do have some liquidity at 3,005. Remember, that's the composite low volume node in this area, equivalent to 29.9150 below, and then above there, 3010 is again in play. This had liquidity yesterday, 3,005. And then 29.90 is very likely to come back. And then from there, it's 29.80 and 83 as the key liquidity areas. Okay, so from here, let's get into what we're expecting for today. But those who've been around for a while know that it's like Friday. And like Fridays, when I ask you to take a moment on YouTube to give this video a like, Please take a moment to find the like button on YouTube. If you're watching this on the Convergent homepage, you can click on the YouTube um, symbol on the video at the bottom right. Go to YouTube and then hit the like button, please. So, what do we have for today? So, what we've created is a, a situation where we have a gap up and we have balance with an upward skew. We have basically chop with an upward skew. So for that, we're going to build a composite to see what's inside of this. And as you can see here, there's a fair amount of volume at 29.97, right under 3,000, and there are some clear, distributions here. One neckline is there, and the other neckline is right there. The lower neckline is 74, the upper neckline is 29.94, 93. That's the area I was targeting yesterday. So what are we expecting for today? Fix our colors. What are we expecting for today? We're trading at 29.97. We're opening in range, in value, expecting an open auction, expecting a lot of chop this morning, expecting that it's very, very likely not to get all that much in terms of action this morning. Expect it to be quite slow, quiet. Uh, I'm looking for it to make an attempt to push into the 3,000 and above, push into the overnight high, but overall, I'm looking for this to slowly roll over and start moving towards that 29.90 again, and likely push through that down into potentially 29.85, 86 before it starts to come up. That's a lot of range for this kind of day, but the context is that, hey, we are battling in this area, and so I'm not expecting it to run off all that much. The profile here doesn't show this area doesn't show all that much balance, and the volume on a daily basis has been relatively light. Yesterday, 797,000 contracts. That's it. And so not expecting too much movement, too much discovery today. So it's a good day to kind of just be patient. The secondary scenario is a drift down into this 94 area consolidation, drift up, push through, get into the 3,000, push through, and then hold sideways before it attempts to migrate higher, taking out that weakish, funkyish looking high in the overnight session, and then feeding off of that to start pushing towards the 3010 again. Not very likely, but that's the secondary scenario, is that we are likely to continue the upward mobility of price here with that. I expect today to be somewhat of a resting day, however. Yes, this is the third Friday of the month, so we have options expiration. We'll see how that plays in. It's not like quad witching, but we still expect some noise at the open. I'm expecting it to be quite pegged at the open, so just chill out, take it easy, and let the market develop for you. This is the end of another week. We're halfway through October, my favorite month. And hopefully you're gaining something every week in your effort to trade. It really is important to do that. Don't come in here and just kind of do whatever and go away. It's really, really important that we pick something up every week and show improvement and have an improvement before we come into the next week. Make sure you take the time to look at your statistics. Um, your metrics for the week so you can stay focused on improvement, and it helps you filter out trades because you know what impact those have, the poor setups have, or the poor trades have, or impulsive or emotional trades have on your overall performance. If you're not tracking performance, you're not serious about being a trader. It's a fact. Take care.